Yeah, good evening, everyone. And it's nice to have us on another edition of TechBiz, brought to you from the stables of Eco Innovation Center, a foremost accelerator and incubation center here in the city of Lagos, 50 Awolowo Road. And it's exciting to be bringing to you this episode again this Thursday evening, and it's a topic that I find quite exciting. It's a topic I'm very passionate about, and I'm sure as we go in, we will have a great time together. Eco Innovation Center happens to be passionate about helping companies, startups, especially companies that leverage technology at the core of their business. We're passionate about allowing them achieve scale, allowing them achieve commercialization, and that is the essence for which Eco Innovation Center exists. And as we provide that required handholding and the support structure that we think startups in the ecosystem need, TechBee happens to be one of those platforms in which every Thursday of a month, we bring in subject matter experts who come to talk to us about several topics that we find very relevant and crucial to the ability of startups to be able to scale in this environment. When we talk about topics such as how to use business model canvas, building products and not apps, ability to de-risk your business, how to have term sheets, how to register intellectual property, and several other topics, investment readiness. We've had 97 different episodes of TechBiz, and we've had 97 subject matter experts take us on different subject topic. And today is the 98th episode of TechBiz, and I'm more than excited that we've kept it going for this long. 98th episode of TechBiz. And this TechBiz webinar, again, like I said, it's very interesting. We're talking about scaling, ability to scale your startup, and we'll talk about the strategies and tactics for growth. Should you want to listen to all the other 97 episodes, you can always find them on our website. Just go to www.ecoicenter.com/webinar. www.ecoicenter.com/webinar. You find the whole 97 episodes and the things we've shared. And my colleagues are dropping that link in the chat room now. And in there, you feel free to run through the webinars that we've had before now. Try and interact with them. If you have questions, we have a forum on WhatsApp and on Telegram where most of the facilitators, the 97 people, are all there, and several other people. We've got about 3,000 to 4,000 people, I guess, thereabout across the both platforms of Telegram and WhatsApp, where you can drop in questions, people walking the same journey and the same path with you, and they can be of tremendous help. So we built a community where there is a support structure for startups to be able to scale in this environment, because you know how challenging it can be. So my colleagues have dropped the link to the Telegram page. If you choose to WhatsApp, they've dropped the link to the WhatsApp page. You can be a part of the TechBiz Nation, where we offer on-the-go support, not just we meeting with you once Thursday every month for just 1 hour, and that's what it is. So today again is a very specific topic. Like I said, it's about scaling up, and I think it's germane that we speak about this. Why? We've had proliferation of so many startups in this part of the world. SMEs, startups, so many of them incorporated every day. The question is, despite all those entrepreneurial initiatives and attempts and ventures, we are not seeing a poverty moderating effect, which means that despite the fact that we're creating so many of these organizations and startups and entrepreneurs and founders, and we're hearing all those big numbers, the number of people getting poor in our environment is on the rise. So we have 66% thereabout that are multidimensionally poor, significantly poor. So the question is, why are we not having a significant poverty moderating effect with all the provision of the startups? And a very easy thought around that is the fact that many of our organizations, SMEs, startups, MSMEs, are still at the very subsistence level, which means scaling up has become a big challenge in this part of the world. And without startups and SMEs scaling up, they continue to, operate in a very micro level, having very little impact in affecting their environment, in solving poverty issues, in solving the real problems that confront our nation and our continent. And that's why we're very passionate about this. And today we will be looking at what are the critical things around ability for an organization, a startup, an SME to scale up. Research tells you from Startup Genome that only about 1% of startups, ridiculous, 1% of startup achieve any significant scale. from Startup Genome, 1%. And until an organization scales up, you're not able to have significant impact. And that is why this is important. How do we grow? We've seen even in the terrain of startups that with coming of the investment winter, we're seeing that ability for companies to raise is becoming more around debt than equity. And with debt, which means that every fund that they're being given is expected that you pay back. The only ability for you to pay back is that you need to get your organization growing, being profitable, being productive, and scaling up. So I think it's no longer business as usual, and that is why this is a very germane topic. So whether you're a founder or your business has been around for a while or your business is new, this conversation around scaling up is a critical discussion, okay? And we, of course, all of us aspire that our businesses should thrive and reach heights. And we think during this webinar, we'll be driving into those critical strategies and tactics that can help you fuel growth. So growth and growth and growth is what we're talking about. So ability for you to scale up. When we talk about the dynamics and this, you know, the struggle of scaling up, we're talking in terms of revenue scale up. We're talking about the products. Revenue growth, product growth, profitability growth, headcount growth. Those are the characteristics that they use to define when an organization is scaling up. And again, this is not my session to facilitate. It's just that this topic is very dear to my heart, and it's important that every time we found an organization, we should be thinking long term to see how do we get that organization to scale up and to have impact in its environment. We need to move away from subsistent and very micro organizations to growing organizations that really have scale and can really drive things. But we have somebody else who is going to do justice to this, who to a large extent is a better subject matter expert than myself. Okay, and so we have someone who is a renowned startup mentor. He's a coach and a consultant. He's the founder of MSME Africa, multifaceted resource platform for micro, small, and medium-sized businesses, okay? An entrepreneur and startup, and entrepreneurs in Africa, rather. He's a convener of MSME Dialogue, and I think having those conversations are important. What are the things mitigating startups, okay? And it's an event for discussing and profiling solutions to issues that affect MSMEs, startups, and entrepreneurs. He emerged the winner of the Entrepreneur Africa Prize for Media Innovation in 2021 and was also Fate MSME Journalist of the Year 2021. He's a SMEDA licensed and certified business development service provider. Okay. So again, he has all what it takes to be consulting in this space and be, to diagnose and share tactics that can allow organizations to scale. He is also a lead consultant of Cedar Tribe, an integrated marketing communications consultancy and training outfit, which is based in Lagos. He's a certified trainer with an international award in delivering training from TQ UK. He's also an international partner with World Business Angel Investment Forum and a member of MSME Community of Practice of the Nigerian Economic Summit Group. Listening to his profile, I'm sure you will agree that we brought to you again to this platform somebody that knows it. It's not what you read in textbook and regurgitate. He knows it. And I'm more than eager for him to quickly be able to, next 30, 35 minutes, grill and just, give it all to us so that we understand what do we really need, what are the tactics that can allow us come out from these limiting issues that have prevented so many organizations and SMEs, and especially startups, which is where I play, from being able to scale and grow their businesses significantly. Seye, our speaker for today is Seye Olurotimi, and I'm excited to have him on board. Seye, you're welcome once more.
Yeah, thank you very much, Victor. Your passion for this topic is palpable. I could almost feel like this is something you are very passionate about.
Yeah, I mean,
sincerely.
Yeah, because again, everybody's, we're seeing so many, everybody becomes entrepreneurs today, but the question is, we're asking ourselves, why are these entrepreneurs not having effect? Why is there so much
happening to them?
Why are we not solving issues, and because when you check also in other climes, huge amounts, I mean, I have statistics that said somewhere that about 80% of employment is created by startups. So it's not the NNPC of this world, it's not the publicly listed companies. It is supposed to be the SMEs and startups that should account for 80% of the employment generation or jobs that people are doing today. So if we do not get this issue around our startups right, then the poverty moderating effect will not be felt. And maybe that's where you see this serious passion for ability to scale up come from. We need to be able to fix this. We need to solve the Nigerian problem. And once you take out poverty from the equation, I think we will have done a lot. But again, this is not my show. Share the floor.
Thank you so much, Victor. Thank you very much. And the passion is also shared by me. So this is it. In Nigeria, for instance, we have 39.6 million MSMEs as of today. 2017, the figure said we had 41.5. Today, we have 39.6. So my poor mathematics tells me that that's roughly 1/5 of our population that are involved in running one business or the other. But just like the question Victor asked, what is the impact of this? We have about 1/5 of the population running one business or the other, but we are not seeing traction. We are not seeing the impact. So it either means that these companies are not growing or they are not scaling well enough so that we can feel their impact in the economy. So 39.6 million MSMEs contributing close to 50% to our GDP and responsible for about 80% of employment in the country. But what are they doing really? Okay. So now, maybe before I start, I want to say good evening to everyone who is on the call. And I just want to start with a question. What is a startup, right? That might look very elementary, but I have a reason for asking that question. So anybody can just type in the chat box, what's a startup in your own definition? Because I think I need to clear some misconstruction in 1 or 2 minutes, then we just dive straight into the slide. What is a startup in your own definition? Anybody on the call, just type something in the chat box. When they say a company is a startup, what does it mean to you? I'll be expecting responses in the chat box. Let's make this as participatory as possible. What is a startup from your own understanding or in your own perspective? When we say an organization is a startup, what does it mean? Okay, so I'm waiting for the responses. Okay, great. A new company or business that's in the initial stages. Great, thank you very much, Leonard. Let me just have one more person. What's a startup? Okay, well, I particularly like it there. A small organization with focus on problem solving. Yeah, so you guys are amazing. So basically, I need to clear, I remember I was consulting for a school some 10, 15 years ago. And anytime I send the bill to the woman to say pay, the woman will say, I'm sure you know that we are still a startup now, so we cannot afford what you're asking us to pay. And in my mind, you're a startup. I don't understand. Because basically everybody thinks a startup is a business that has just started. No, MSMEs are not startups. We need to clear that, right? I play in the MSME space. I play in the startup space. But MSMEs are not startups, okay? So this distinguishing factor about startups is the ability to scale and the use of technology. So take away technology, take away scalability, then your startups will become your conventional and traditional MSMEs. And that's why I'm so passionate about helping even the MSMEs that I work with to see the advantage in running like startups, right? Because the startups have what I call a playbook. And that's why probably you will never see or get to hear that a startup goes to a bank to go get a loan, right? Like debt. They are always looking for equity. You won't hear that Paystack has just gotten 500 billion debt from a bank. No, you won't get to hear that. You always found out that they raise funding from venture capitalists, from angel investors, or maybe at the latter stage they do IPO. But let me not jump ahead of myself. I just thought it necessary to clear that. Okay. So startups are not MSME. Startups have the ability to scale and to grow rapidly. Now I have a question. I have a quote. Startups don't fail because they lack a product. They fail because they lack customers and a profitable business model. So part of the yardstick for scaling is having customers and having a business model that is profitable and that you can rapidly scale. If you cannot scale, there will be a problem, right? So while startups may be new, but the really distinguishing factor about startup is not the fact that they are new, it's the fact that they can scale up, okay? The fact that they can scale up and they are driving what they are doing with technology, all right? So let's go on. Startups don't fail because they lack a product, they fail because they lack customers and a profitable business model. That's why startups fail. Now, so what do we need to know about startups? I've already mentioned, but usually startups operate in a fast-paced and dynamic environment, and they're always seeking to disrupt existing industry or create an entirely new one. So one would mention startup in Nigeria as you begin to, or in Africa, you begin to think of Paystack, Flutterwave, Chipakash, and many other organizations. And you know, the amazing thing is that when you look at these guys, some of them are less than 10-year-old, and their valuation is actually a lot more than the valuation of banks that have been in the system for over 50 years. And you're asking yourself, how do they do it? One day you heard that they are raising pre-seed, maybe 500K, then they are doing C, they are doing Series A, Series B, Series C, and they are just raising. I saw one that raised $38 million, I think some days ago. And you ask yourself, how long will it take a traditional business to raise this? It is because the investors are looking for the ability to scale. When they see the ability to scale, they will put their money there. So that's why it's important that we are talking about scaling and growing your startups, all right? So they operate in a fast-paced environment and very dynamic environment, and they drive whatever they are doing with technology. Without technology, there is no startup. So you compare the traditional taxi driver with Uber, right? You see the advantage of technology. You compare whatever business model you've been used to, right, with another one that is driven with technology, then you see what a startup actually is like. Now, what are the characteristics? Number one is innovation. A startup comes up with a fresh idea, right? And sometimes when we say innovation does not mean something entirely new. It also means improving on what we have in the market. Scalability, that is probably probably the most important thing. They must have the ability to scale. I've sat down in places where we're trying to maybe grant, or you have hackathons, and you see a solution that a particular startup is bringing, but you ask yourself the question, can this thing be scaled? If it is not going to be scalable, if it does not have a universal appeal, investors are weary to put their money in it, right? So it must be scalable. Then startups usually have limited resources, right? Especially at the beginning. That's where we always encourage bootstrapping, getting money from family, friends, and foes, right? Then, of course, there is a lot of risk and uncertainty in startups. Recently, I invested in a startup, and I was asking myself, like two weeks after, are you really sure that you should have done that? Because especially at the initial stage, there is a lot of risk. You only get to hear and celebrate the ones that are raising money in Series A, Series B, but you don't get to know that for everyone that you get to hear of, probably 10, 20 others have died, right? It's always very painful, but there is a lot of risk and uncertainty. But when you actually get it right and you're able to make it, yeah, you can scale fast. Entrepreneurial culture, disruption, of course, and market impact. Those are the things you can, just try to imagine the impact of the likes of Paystack, Flutterwave, I keep using these guys, and the other fintech on our economy. Imagine that those guys don't exist. How are we going to be settling our payment issues? So they always have large impact in the market, all right? Okay, so what are the key stages you can see in the life of a startup? We are still talking about growth and scaling, but I just wanted to lay this foundation in another 5 minutes. Then we'll quickly go into tactics and strategy for scaling. So ideation is the very first stage. When you find a problem and then you think of a solution. So you think about the fact that everybody in my area has a laundry problem. They are bachelors. They don't know, they are not able to sort out their laundry. And then you begin to think, we have dry cleaners or launderers scattered around, but they are not able to attract these people. Then you create an app, right? So there's a problem, there's a solution. You create an app that aggregates the launderers or the dry cleaners, and then you provide the handshake between them and the people that need their services, and you get paid for it. That is ideation, right? You see a problem, and then you create a solution for it. Then you must develop what we call an MVP. I'm sure almost everybody on this call know what an MVP. That's just like the minimum viable product. Something that can demonstrate to anyone that this thing can actually work. It doesn't have to have all the advanced feature and everything, but something that we can see and say, yes, this thing can work. Then let's have a discussion. Then after that, you need to do what we call the product market fit, where you begin to test your product. After the MVP now, you test, you receive your feedback, you improve on your product, you do a lot of tweaking here and there at the end so that you can have a perfect product. After that, of course, you scale, right? Scaling, then sustainability. So, but the scaling does not happen automatically. There are things you need to do. So let's go. Now, growing and scaling, do they mean the same thing? Because sometimes we use these terms interchangeably. Growing and scaling, do they mean the same thing? They don't mean the same thing. Even though both point towards expansion, doing more than you've been doing before, but they don't mean the same thing. Scaling is exponential. And that's what startups have as advantage over your traditional MSMEs or your regular entrepreneur. The regular entrepreneur will probably grow, right? But a lot of them don't scale like we would want them to scale, because scaling means that you are getting revenue at a rate that surpasses the rate, your addition of resources. So look at this map. I'm sure you can see the graph, the graph I have on my screen. You can see growing and scaling. You can see the way it is. So you can see the curve there. So the cost is growing as revenue is growing. That's when you talk about growth. But when you look at scaling, you can see that the cost is not growing at the same rate at which your revenue is growing. But let's not forget that before this time, some startup founders must have seen what I call shege, right? I mean, everybody uses that term now. I remember one of the startups I recently invested in. So every month it sends us a report and it talks about the burn rate, saying that you guys, the money that you have given us as investors, this is how many months we still have before your money gets used up. And I'm asking myself, when are we going to do our pre-seed? When are we going to raise, right? Because at that point, every money counts to them. They are not raising fund yet. They are testing the market. They are doing product market fit. Some of them just discovered, they just got their MVP right. So they must have seen a lot of things before we talk about scaling, right? A lot of them don't make it to this stage of scaling. But basically, costs and revenue, they are not growing at the same pace when it comes to scaling, right? Revenue is shooting up. I'll show you the example. I have some example from Paystack and Flutterwave and one other company. You see the way they actually scaled. So you might stay 1 year, 2 years, 1 year, 1.5 years, and you're taking baby steps. But when that time for scaling comes, you can just move from 1 to 10. And everybody's asking what's happening. It's because you have a backbone, you have deployed technology, you have tested your idea, right? Now you have fun to also make things happen, okay? Now look at this. Your normal arithmetic, right? 1 + 1 is equal to 2. But when it comes to scaling, 1 + 1 becomes 11. Somebody is saying, did you go to school? I did. But that's what it seems to look like when it comes to scaling, because it is not like, okay, I produced 200 quantities of a product and my cost is 20,000. Now, if I double my cost to 40,000, I should be able to produce 400. No, when you scale, it becomes something very exponential, right? Now, see what happens at each of these stages. Launch, growth, and scale. Okay, but you might ignore the 5 figures, 6, 7 figures, and 8, 9 figures, because now we'll be talking about which currency and which country are we referring to. But basically, look at this. The priority when you launch is to get clarity on your customer demographic and product market fit. When you're growing, you want to have predictable sales and marketing channels. But when you're scaling, you're looking at system and holistic customer journey, right? So at the point of scaling, you begin to share the toga of a founder, you become a CEO, because now you have other people that are working with you, and then you have to run a system, you have to put proper structure in place. What is the focus when you are launching? Discovery. What is the focus when you are growing? Survival. What is the focus when you are scaling? Leverage and consistency. You have to be there. You have to be consistent. You must show up every day and every time, because now people have placed a bet on you, so to say. What question do you ask at launch? Why should customers choose me? Then at growth stage, how do I grow? Then how do I scale? Let's forget about team size, but what should be your attitude when you are hiring? Because the people factor is a very, very important factor in scaling. How well you scale is a function of the people that are with you. That's why even when you are pitching, investors don't invest in your ideas alone. They invest in the founders and his team. You might want to hear that again. Investors don't invest in the idea alone or in the company. They invest in the founders and other members of the team. They want to see your team. So when you're growing, you hire for attitude, right? Who has the right attitude that can help us grow our business? But when you are scaling, you hire for your strength. You are looking for attitude and aptitude. What do I mean by you hire for your strength? That thing that you can do well, you cannot afford to keep doing it as a CEO, right? So, okay, let me go back. Let me backtrack a bit. When you are growing, you hire for your weakness. That area that you cannot handle, you get somebody to handle it for you, right? For instance, you are not good with figures, you are not good with technology, you give it to someone. But at the point of scaling, even the things that you know how to do, you cannot afford to get busy with operations every day because you have to think at the higher level, come up with strategy, right? So at that point, you hire for attitude and aptitude. You hire people for your strength. The things that you can do well, you hire people that can also do it. You train people that can also do it, right? Because that is the only reason why you'll be able to scale effectively. Then as a founder, when you're scaling, what are the things you need to do? You need to do a lot of coaching, developing, directing, approving, and strategizing. You don't spend all your time as a founder that is scaling, doing operation. It is counterproductive. You need to learn how to coach, delegate, direct, and strategize. That is what you should spend most of your time doing. Okay, so let's move fast now. But I think we have a good understanding of what happens at each stage and why it's important. So what should we know? Building a successful company is not just about growth, it's about scale. No, don't just say, okay, we are growing. No, you have to scale. You have to do something exponential. Growth is adding resources at the same rate that you are adding revenue. While scaling is adding revenue at a rapid rate, while adding resources at an incremental rate. You are putting in 5 and you are getting 100, right? That is scaling. Growth, you are putting in 5, you are getting double of what you used to get before. Maybe like if you're doing 5 before, if you put in 10 resources, you get double of your result. But at scale, you are doing, I keep saying this, right? So scaling means your business setting the stage to enable and support growth in your company. And I mean continuous growth. And you need to do a lot around planning, funding, the right system, the right people, the right processes, and of course, technology. You can never talk about growth for a startup without talking about tech. Tech is what drives it. Tech is what drives growth. Tech is what drives the startup business. That's why I say the startup seems to have a playbook that the traditional MSME doesn't seem to have. They drive their business with technology and they're able to scale at an exponential rate, but it is not also automatic. So, okay, I said I wanted to show you an example of scaling and growing. I hope you can see my screen, even though this is tiny. Look at Flutterwave in 2018. In 2017, they had 2.7 million processed value, right? In 2017. And then look at 2018, they moved from 2.7 to 29 million. How do you explain that? If you move from 2.7 to 5 million, we say, okay, it is understandable. But scaling would make you jump like crazy. But look at 2017. From 2017, they moved from 1.6 to 2.7. That's still growing. But at the time when they started scaling, they moved to 29 million from 2.7. That is scaling for you. It's always exponential, but it was not by magic or wishful thinking, right? A lot has to have happened before this would have been made possible. Now let's look at Paystack, which is also like a direct competitor to them. They did in November 2015, the transaction volume was 318 million. February 2016, 3,177, right? That's some level of scaling. But by March, the following month, they had 31,771. You can see Then August 2016, 5 months after, 317, 713. So this is how exponential this thing can be when we are scaling. Now somebody's asking a question, how do we achieve this kind of result? What do we need to do? What do we need to stop doing? What are the factors that are responsible for this, right? I'm sure somebody's asking that. So if you think this, if you're following me, just type yes in the chat box. If you think this is making sense, type yes in the chat box so I know that I'm not just talking to myself. Type yes in the chat box if you are gleaning something, if you're learning something, okay. While like that, you can probably also type what you're learning, okay, something you've gained. All right, so you can see the example of these guys, and there's no way you want to talk about the startup ecosystem in Nigeria, and you won't talk about Flutterwave, Paystack, the likes of Jobaman, Jumia, Konga, and the rest. These guys have done quite a lot. Now we talk about having unicorns in the country, and I'm sure you know a unicorn is a company that has a valuation that is above 1 billion, and we have that already in Nigeria. How many organizations that have spent close to 200 years, 150 years in Nigeria even have that status? You want to ask yourself. Now, scaling up and starting up. A scale up is not a startup, right? It might look like some bits of semantics, but they are not the same thing. So when you have gotten to that stage, when you are scaling consistently, you become a scale up. But look at this, 99.6% of ventures stall out or die. Now, what does it mean to scale up? You grow from being a team to a company. So it's good to say, okay, I have a team. It's just a team of people. But when you're scaling up at that level, you become a big company. You become a company. And then you're not just a founder at this point. You become a chief executive officer. Why? Because you have other executives working with you and reporting to you. And that's why sometimes it's laughable. You see a one-man business and he calls himself the CEO. So who are the other executives that you are the chief over, right? But that's just aside. So you must become a CEO from just a founder. From your first revenue, you move to recurring revenues, recurring revenue, predictable revenues. Then you move from project to processes. From your first product, you have an innovation pipeline and you begin to do a lot more. So it's either you're improving on what you have in the market or you are churning out a lot of things. You are doing line and brand extensions and you're just doing a lot more than you were doing before because now you have an innovation pipeline. That's what scaling up can do for you. Okay, so what's the formula? Somebody's asking. There is no simple formula, really, because sometimes, even though there are things you can do that can make your success predictable. But look at this. You can have a plan that looks straight like this, but along the line, you will have to do a lot of things. I remember when we had our MSME dialogue, sometimes, I think it was the 3rd edition, and we invited a couple of people. I remember on Yeka of Farm Crowdy came, and the guy said that everybody's talking about Farm Crowdy, and they were applauding him that before he could raise the funding that he got, that made them quite popular, he he approached 86 investors, 86, and he got he got a lot of rejection mails. For some of them, they even looked, they asked him to come, he presented, he pitched and everything. But he spoke to 86 investors before he could actually get one of them to invest. Now, this is how it looks like. So we might have a plan to say, okay, this is the playbook for startup. I start with family and friend funding. I do some bootstrapping. Then I do pre-seed. I do seed. I do Series A, Series B, Series C. It looks very sweet, right? Especially when you see people that are doing it. But you know that a lot of work is involved in it because the terrain is actually very volatile, uncertain, and complex. We talk about the VUCA world. And then statistics even show that startup funding in Africa dropped, right? It dropped, significantly in the last year. And so that means that we need to, a lot of things are actually unpredictable. Entrepreneurship really is about risk-taking and good fortune. The more risk you can take, the higher the probability that you're going to make good fortune from whatever you're doing, okay? So it's very important. Yeah, somebody's saying, can we get a slide? You will get a slide. I'll send it across. Success is part dependent. So what part are you working on? It can actually affect how much success you are making. But I need to sound a note of caution to everybody who wants to do fintech now. But there are other parts, right? Some of you don't have any business with a fintech. You might just look at an original problem. It might not be fintech. It might be edtech. It might be edtech. It might just be something else, but everybody wants to do the same thing that everybody is doing. But your part might not be their part. And then also investors sometimes they check their portfolio. We have 4 fintechs already. We have 20 edtechs. So we don't want to invest in another company in the same sector. So there are a lot of sectors that you can actually look into. So everything tech is not fintech, is not edtech, right? You can look at other parts to go into. Growth is interconnected, can be organic and symbiotic, right? So now let's talk about growth strategies. And this strategy that I'm sharing applies to both your MSMEs and your startup. So there are 4 growth strategies. After that, I'll go to scaling strategy that applies basically more to startups. Number 1 is market penetration. In this case, you are selling more to existing customers, or you are targeting new segment with existing products. So I am in the market, but I want to penetrate a lot more. I want to do a lot more in this market. And I can readily give you examples, right? So you see products in Nigeria, they are saying, no, we need to capture a lot more. That's probably the reason why you see Indomie. They will say, no, everybody thinks Indomie is just for children. Now we want to do Hungry Man Pack for adults, because we have that market, but we want to penetrate a lot more, right? We want to sell more, or probably you have existing customers, but you want them to buy more than they are buying. So there's a way you can work around it. So you sell more to existing customers, or you target new segments with existing product. That is market penetration. That's one way to grow. Another one is market development. You sell your existing product into a new market. Even people that never thought that they needed that thing, you made them realize that this is a need. Sometimes people don't know that there is a need until you create that market for them. And they found out that this is actually something that we can look at. Ride hailing, for instance, we're satisfied with those normal regular taxi drivers, but somebody saying, no, we need to do a lot around it. Then there is also product development. You create a new product entirely to identify a need in the market. Then you have diversification, when you go into something entirely new. So you are doing this today, you move into another area entirely. That is diversification. Those are 4 ways you can grow, whether it's your traditional small business or is a startup, all right? But you just need at every particular point in time to know what you're doing and why you are doing it. You cannot use market penetration strategy in some markets, especially if it's oversaturated, right? There are some strategies that will not work in some places. So you need to know which one works. What are the things that can drive innovation? That can drive growth. Basically, innovation is the engine room, but a lot of things also happen around that. So you talk about vision, your strategy, your team, and your organization. I said it before. Your team can either make or mar you. The people that are working with you, the people that you have called to become your co-founders, your CTO, or whatever name you call them, they can determine whether you would grow or you will get stunted. So your delivery model, your economic model, what's your value proposition? What's that thing that stands you out in the market, right? Your USP. What is the value you are bringing to the table? Who are your target users? So all of these questions are questions you should ask if you are really serious about growing and scaling. You must be able to answer them. And something as simple as your regular business model canvas can actually solve this problem for you, where you look at the various parameters. You look at your revenue model, for instance. You cannot think about scaling and growing if you're not talking about what your revenue model should be. Are you going to make money from subscription? Are you going to do freemium? Are you going to do pay as you go? Whatever model that you are thinking of must be such that can fetch you the needed revenue, okay? Very, very important. Now, what are the tactics for scaling? Now we are getting there, or we're there already. Number 1 is you must engage in the next round of funding. So, but you don't become attractive when you have not done your homework right. So every single day you get to see so startup has raised $2 million in maybe pre-seed, in seed or whatever round of funding. I remember I was working with some startup guys, right? I was mentoring them. And then at some point, I got an opportunity with one of the biggest accelerators in the world to say, okay, recommend some startups for us to become part of our portfolio. And I was talking with this guy, and the guy said, sorry, we didn't tell you. We're having some discussion with some people, and we're looking towards us getting acquired. And I was like, acquisition, okay. But the long and short of it is that after like a month or two, those guys got acquired for $2 million. And I put my hand on my head like this, that I'm your mentor. How much have I made, right? But these guys actually did a lot of work. They did a lot of work. They got a lot of things right, and they became very attractive, not just for funding rounds now, but for our acquisition. But you might need, sometimes you need to have that conversation about whether it's time for you to get acquired or not, because sometimes you do it too early. What I'm saying is that engaging in the next round of funding is one of the ways to grow. You cannot grow without money. So funding is very right. You should be talking to your angel investor, venture capitalist, but you need to understand the terms and the conditions very well. Somebody was having a discussion with me yesterday, and he said he almost sold his startup for $40,000 yesterday, 2 days ago, because he needed money, and he got on a platform where he can sell a startup. But he just told himself, I need money so badly, but we're worth a lot more than this. So engaging in funding is one of the ways to scale. Another one is investing in technology and then making use of data and analysis. You cannot grow without technology. And that's why you see every startup, they always talk about their CTO. And that's why one of the most important set of people right now are the developers, right? They create the app, they work around a lot of things, front end, back end, and what have you. So technology is a major driver of scaling and growing. And you don't have to know technology, sincerely, but be wise enough to approach the people that can help you deploy technology to scale rapidly. You need to move away from manual things. Even your traditional MSME can actually optimize by automating a lot of things, right? Then, of course, deploying a new marketing and sales strategy is another way to scale. You need to ask yourself, we need to reach a lot more people. We need to expand into a new market. How do we do it, right? So you need to work on your marketing and sales strategy if you want to scale. Then, of course, you can also launch an associated product or service. Sometimes you're skimming the market or you're doing quite well in a particular sector. You want to look at associated product. So maybe you start with a payment gateway. Do you also want to look at something related to that can also fetch you money? Can you also become an online store where even people that were just using you for payment gateway alone can actually have their store, right, on your site, because that also further, gets them bonded with you. So start thinking of associated product or service that can help you keep the people that are your customers within your circle so that you keep making revenue from them. A lot of time, what startups do is that they have customers that just do one-off with them and disappear. But the best way to scale is to have customers that you can keep almost for a lifetime, because you keep creating products that can continually meet their needs. Then, of course, you might need to hire experts and expand your team. That one is non-negotiable. At some point, you need to ask yourself, what particular talent do we need to move this team forward? Because it's very important. You cannot do everything alone. But also, you need to hire right. You need to expand your team. But for every addition to your team, you must ask yourself, what are they bringing to the table? You don't hire on sentiment, right? Okay. Then you might need to also get external help. You might need to get mentors, consultants, coaches, and go into strategic partnerships. Some of the things you need to do to scale are not things that if you put your money into, they will make sense. But somebody already has that backbone, they have the infrastructure. Do you want to partner with them? Do you want to collaborate with them so that you can make use of their infrastructure and the backbone and the things they have for you to now scale what you have? So we need to drop this toga of competition all of the time. We need to start looking more towards collaboration. We need to start asking ourselves, who has the thing that I need to deploy to scale? Can I talk with them, right? And then we can both combine and I can scale. They also get something from it. So it's a win-win all of the time. All right, so what's my summary? Funding is one of the things you need to scale. Investing in technology is non-negotiable. You must be looking for new markets and then thinking of growth. It's very, very important. Then launching an associated product and service, it's a way of ensuring that you keep your customers and you get more customers. You don't just stay with one product. You need to learn to have an innovation pipeline, like I mentioned earlier, a pipeline that keeps ensuring that you have things to keep churning out in the market, and that because people have already trusted your brand, they believe that everything that comes from you is reliable, of course, until you prove them wrong. Then you need to get experts when you need them. Don't be too cost conscious that you're not bringing in the expert that can help you to scale. You will remain on the same level. Then getting external help is very important. Getting people that know what to do to help you get things right is very important. Like I keep saying, investors are not just investing in your idea or your company. They are looking at the people that surround you. What's the strength of your team? And that's why you also find out that they're also looking for your how well knowledgeable you are. If you look at the biggest accelerators in the world, or the biggest investors in the world, most of them have accelerators. Why? They want you to come into the program, get a lot of knowledge, teach you how to run the business. Some of them also want to get on your board because they want to be sure that the person we're investing is not going to fritter away the money, right? So get all the skill, get the expertise, talk to experts, invest in technology. Then, of course, funding is a very vital part of growing and scaling your startup. So I need to stop now so that we can entertain questions. I really do hope that I've made some even if it's little sense from this session. Thank you very much.
Oh, thank you, Seye. That was an exciting one, and I'm sure we will get the barrage of questions. And this goes to all my colleagues, I mean, everyone rather who is on the call, on Facebook, on Instagram, on LinkedIn, wherever you are. Just drop your questions and my colleagues will help sort those questions from wherever different platforms that they are and drop them in the chat room, and then we'll talk about it. But while my colleagues are doing that, again, look at all the platforms where we're being streamed. While my colleagues are doing that, I think it's good I just do a quick takeout of what the lessons are. So I see that, like you pointed out clearly, Seye, people mix up the difference between a startup and an SME, okay? When you choose the traditional business model, whereby you want to just grow in arithmetic progression, a traditional business model, then, and you're starting small, fantastic, you're an SME. Again, the fortunes can be predictable, okay? You're in trading, you're a normal, typical businesses that we run and all that have been there in time. Those business models are SME business models, because at times people mix it up. They're not sure if I'm a startup, I'm an SME, I'm an MSME. So that's clear. When you are talking about companies with exceptional growth potential, when you check literature and scholars, they tell you that your revenue must be growing on the least 20% year on year for the next 3 years for you to begin to scale up. Same must happen to your revenue, must happen to your headcount in terms of the number of people, because we expect those growth to drive impact, number of people, revenue growth, and business growth. Must grow year on year. And again, talking about the issue of funding, a critical hallmark of an ability of a company to scale up is the ability to attract funding. Funding is a measure of ability to scale. And because funding itself means that your business model is trusted, the money you get from VCs and angels are more expensive than the traditional fund that you get from banks and all that. And that's why a typical angel VC, whatever is, we're talking about X10, for them to exit 10 times the size of the amount they put in 5 years. So X10 in 5 years and all that tells you how much growth potential is expected from a startup. And it's good that we have this understanding. And it is only when we stop growing micro SMEs and begin to grow startups that we will begin to see poverty moderating effect of our entrepreneurial ventures. Like he said, almost a third of our population are doing one kind of SME or business or the other. Zero poverty moderating effect. So for that to happen means that we need to move away from subsistence way of doing businesses to growing businesses that are scaling up, that have high impact, high growth rate. And I think that was the major call out I wanted to share in there. So funding, and he said something which is critical, which is about what Eco Innovation does and why we bring TechBiz to you. Look for accelerator programs, look for incubator programs, such that these programs can help you understand how to scale. You cannot be taking baby steps and assume you can have significant scale up. That won't happen. So again, very explosive, very exciting. You will get the slides, but I want to see again if there are questions in here. How can you join? Question: are there any specific growth models or frameworks that startups should consider when planning for scaling? Are there any specific growth models or frameworks that startups should consider when planning for scaling? What factors should they take into account? Seye, you want to go for that?
So basically, when we talk about model, I think I already mentioned some model: market penetration, product development, market development. But maybe I want to talk more about parameters. And Victor has already started talking about the parameters for scaling. Talk about your head count, talk about your revenue. But revenue is a major parameter when it comes to scaling. But if you're talking about the model, so the model is market penetration, where you just want to sell more to already existing market. You can have market development. You are creating a new market. You can have diversification, where you go into something entirely new, right? So those are models. Or you can do product development, where you just create something new, a new product or a new service, because you have identified another gap in the market, right? Because now we are talking about scaling. It's not like you are just coming to the market, but you've seen a gap that you see like, okay, if I can still fill this, I will make more revenue, and then that, of course, equals to scaling. So those are probably things you can look at.
Great. Thank you very much, and I think that was quite instructive. The other thing I think most people who are on the platform need to understand is the concept of what we call innovation. Okay, this is a totally different session, and I think I'll talk with the team. We need to go back to the concept of innovation and how talk about box tree thinking and all that. We might need to come talk about that topic later in the year. So another thing about this model we're talking about is the fact that for you to scale up, you must be innovating. You can't be doing traditional business and want to scale up in an exponential way. If you see the chart he shared, which I'm hoping Seye can just, if he has the slide, show up, that slide speaks volumes if people understand it. Where you see that for a growth company, your expense is growing, be it also your revenue is growing. Okay, that's growth. But when you see that slide which is shared, and I think that alone should be a topic for a different webinar. Just beautiful. Just take a look at this slide. This slide is explosive for anybody that is watching this. On the left side is a traditional, I would say traditional SME business that is doing well. Okay, you are doing well. This is not a business that is having issues. You are doing comfortably well. Means you are, as you grow, your cost grows. Okay, and I think revenues grows, headcount grows. You're growing. Fantastic. Scale up, which is what, you are reading on somebody who took $10 million, $15 million, whatever dollars raised, investors are chasing them and everything, throwing money at them. You must belong to the other side. As your revenue is growing, your cost will not grow at the same progression. Explosive. And this summarizes that whole concept. And I think Seye has done a fantastic job. What makes you able to grow revenues without growing costs at the same level is ability to innovate. Yeah. And innovation is what unlocks the wallets and unlocks that huge potential for you to accelerate and really scale. So innovation might be also to a large extent using technology to innovate, but again, looking at your business model, traditional business model, and turn it around. And let's talk about, Seye, we didn't have enough time. Maybe we'll bring you back again. In short, I'm convinced we'll bring you back. We need to have a joint session around this thing. Take an example of a typical taxi, okay? So somebody is talking about ride hailing and they are raising billions of dollars and suddenly they can scale and be in 20-something, 40-something countries. But you are driving a taxi, or let's even say you have a fleet of taxis and you do hire purchase for people, traditional business model. You are growing, your expense is growing, repairs are growing, drivers are growing, blah, blah, blah is growing, revenues are growing. You're a typical SME. But you change that business model to ride hailing, put a platform, people come in and all that, you become Uber, you become Lagra, you become whatever, exponential, people throw money at you. What was the difference? Two of you are carrying people from point A to point B. It is the nature of the business model. So without a business model innovation, without a rejig of the model of how the business is run, a SME business will grow at a basic arithmetic progression while people who take the pain to understand how to innovate their business model will grow at a scale-up geometric progression. And I do think that that has helped create some context. Again, Seye is the subject matter expert. And we do hope that I'm most definite that we're going to have Seye back sometime again to look at this, because I'm passionate about this concept of scaling. Organizations, SME startups must understand how to scale for us to begin to solve this Nigerian problem and be able to manage the Jackpot syndrome and whatever syndrome and all the stigma that is dealing with us. It's about innovation. That's what helped China, India, across different sectors. They innovated. If you begin to innovate your business models and innovate your products, we will see scale up. You cannot be selling popcorn and doing things the same way, traditional business, and expect huge scale. It won't happen. It will take you 40, 50, 60 years to get to that place where innovation will help you get to in a few months, okay? Thank you very much, Seye. Again, for everyone, as we begin to move quickly to round up, you can find this webinar by noon tomorrow. It will already be on the site. This is the 98th episode. We've had 97 different episodes with subject matter experts come to speak to us. And you can find this by 12 noon tomorrow. Just go to the site www.ecoicenter.com/webinar. You will find this there. My colleagues will drop it in there. Should you have questions where you want to have a session where we can talk, join either the WhatsApp group of Tech Biz Nation or the Telegram, and then we can see how we can add a lot more value to you. But I think this is exciting. I think we are excited to gather insights and opinions on strategy and tactics employed by startups to achieve sustainable growth. Okay, so yeah, so I think, this is beautiful. So again, I see the Eco Innovation Center team doing something remarkable here. And this is for us to help prepare for the next sessions, because we're passionate for the next few months to help see how we support so many startups to scale. So I think they've dropped a questionnaire. Do well to look at the questionnaire. There's a link where there's a Tech Biz Scaling Startups. Just go in there, feel free to fill the survey via the link and come back to us. So there's a survey around scaling up. We're trying to see what are the issues, how can we help? Somebody has asked a question, how do I join an accelerator and all that? Please fill that link. There's a link in there, click the link, fill the questions in there, just, very short questions, about 5 to 10 of them. It allows us, again, be able to define how we can create a session and how we can create help to help startups to scale, because that's the only way. Somebody asked a question about what about questions around incubator? What about questions around incubators and accelerators? Let me see if they've asked the question before. How do you scale a product for an underserved market, especially in an emerging market? Again, we're talking innovation. Somebody said something about incubator. I want to go back. How do we or when can we get incubators programs? Seye, do you want to speak about that? That's your forte. You do a lot of that.
Okay, so accelerator, incubator. Somebody's asking, what's the difference? Sometimes the line is blurry, but accelerator, as the name suggests, enables you to make rapid progress as a startup. When you talk about accelerating. So usually an accelerator provides a lot of training, a lot of capacity building, and usually we end up in a demo. The incubator supports you, right? They can give you like a co-working space. They can give you tools and what have you. How do you get to an accelerator? There are opportunities everywhere, every single day. For instance, in my own community, we publish opportunities every day. Go to opportunity, just search opportunity. I don't want to start mentioning names, right? But there are a lot of websites where you get to see information about accelerators. But what I found out about most Nigerians, when you send them opportunity that's just accelerator, they are not seeing grants, they are not seeing money. They say, no, we don't want. And it's funny because those trainings are invaluable. You get trained, and usually a lot of accelerators will end up in a demo day where you are able to pitch to investors or even get a grant or something, but you will have learned how to manage a business. They have a lot more confidence in you getting to an accelerator and giving you money because they believe that you have learned how to manage a business before they can give you the money, and they are sure that you manage the business well. Accelerators, there are information everywhere. Get into them, learn a lot, and then look out for opportunities here and there.
Great. Thanks, Seye. Again, for people in startup business, your incubators and accelerators is like you going to university. So that will qualify you for a certificate, that will qualify you for a job. Let me use that, because when you're looking for a job, you say you have 2-3 years experience. Most people who invest want to see the pass through an incubator and accelerator because those institutions de-risk you. Incubators and accelerators are a construct of the startup ecosystem. They are part of the startup ecosystem. They are not normal organizations. They are created for startups. Incubator is where you start. I have an idea. how to turn Google to Ekpa or how to do whatever. And you go in there and say, all I have in my brain is an idea. I don't know how to turn this idea into an MVP. Enter an incubator. They incubate it for you. They help you, they handhold you, they assist you. When you are graduating from an incubator, you have an MVP, minimum viable product, which means that this product exists, so it has not started making money. You now start that, demonstrate the concept works, get into an accelerator, then they give you all the other components that moves you from that MVP to running a business, which is showed in one of the slides, which means you are not at growth scale. You are no longer saying, I'm a founder, I'm a founder. You are now a CEO who runs the systems. There are VPs working. You have VP, you have CTOs, you have strategies, you have people who already have stakes in the business as co-founders, who but all of you now have a better structure, then you can scale. No accelerator or nobody puts money in a company without a team. The team structure is in, those are the things you learn. Nobody invests in your idea, fantastic idea. So what? But what is the team behind the idea? They'll tell you so many things that helps you shape your system. The product factor, which talks to you about what is the context of what's the size of your market, your addressable market, what's the context, what's the opportunity, what's the deal, the plot factor that's in there. So there are many frameworks you will learn. Okay, there are many frameworks you will learn in accelerator incubators that positions your business for ability to scale. When you want to scale is when people now see that this thing makes sense. I'm putting my buck behind it for scalability. That is when you are now beginning to scale and grow. But it's not the grants. I know there are many grantpreneurs out there. You are looking for every free grant, every free money. Show us love, do giveaway, love, all those things. Is the word of the hustlers. It's the hustler mentality. That success is not predictable, it's not replicable. Nobody puts investment behind there. And when people dash you money, you don't scale. So grantpreneurs, pitchingpreneurs who just want 10, 15,000, those are not the people we're talking about. Those are hustlers that have migrated into the startup space. When we are talking of real companies who are growing, it's not about grants. It's about building a model that when you pitch your business, somebody is saying, I want a percentage of this business for this investment. What do those people bring to the table? Much more than the money they bring expertise and network.
Exactly.
They put you in front of people that write the checks. Because guess what? People invest in you, not only your idea. The idea is a dime a dozen, but can they trust you? Somebody must say, I am an angel. I have given them 50,000. You can give them $1 million. I trust them. So passing through that incubator, that accelerator, refining your business, putting a model is much more than just the money. It will put you in front of people that can now vouch for you for the bigger tickets to come in. And that's the process. That's why once you've accessed once, it becomes easier to access again. But are you ready to do the work that prepares you? And that's all this concept of scale up is about. Again, it's something we're passionate about, but Seye, I think we've not done enough justice. We have to come back. I'm searching your questions. Oh my, we're 3 minutes past the hour. Should you have any further questions, just drop it. But a more better place to drop your question is in the TechBiz forum on WhatsApp or Instagram. You are struggling. You've been in business for 5, 7, 8 years. I mean, I don't do this full time. This is Seye's everyday work, consulting, helping people scale up, and holding. Drop your details in any of the chat rooms we have, and we'll create a connect between you and Seye and see how they can be able to hold you and provide that support on the one-on-one business. And of course, if you're part of any of our incubations and acceleration programs, we also can do that, because our startups need to begin to scale for us to begin to have the impact, so that we come away from this hustling mentality to people who are actually building ventures. And again, that's when we begin to have impact. Thank you everyone for being part of TechBiz again today. I find it difficult always having to have a hard stop, after the hour, but we have to go. We need to recognize the fact that people have promised to spend an hour with us, and we want them to spend an hour and get back to you. But you can always come back over and over again to this episode, the 98th episode, read about it, listen to it over again, and then you can ask us questions. This is coming from you from the stable of Eco Innovation Center. Eco Innovation Center is made up of the incubator and the accelerator program of Eco Innovation. We're there at Victor Olurotimi. Impact cuts way across Lagos to the whole of Africa. We do quite a number of activities and events. Our flagship is the Art of Technology Lagos, where we have people from different parts of Africa coming into Art of Technology Lagos. We had over 56,000 people attend the last 4 years of Art of Technology Lagos, and this year again it will be coming up in the first week of December. So that is what Eco Innovation Center does. We're big on civic tech. We have key sectors where we try to accelerate and incubate businesses. Part of the initiative, we have a hackathons. We have one. If you go to our website of wecoinnovationcenter.com, you will see a few hackathons that are running. You see a few of our boot camps coming from a Institute of Technology. Should you want to be a part of it, which means you are not yet a founder, you want to grow into a career in tech, my colleagues are dropping the link for the websites so that you can join any of our cohorts. We're doing product trainings, we're doing data sessions trainings. My colleagues will be dropping the website of Eco Innovation Center and Eco Institute of Technology, where you can begin to learn about this concept of startups and tech and how to scale. They will drop some of those links in the chat room. I hope they're dropping it now. And then they can also help you drop also the website where you can see some of our hackathons and you can participate in them. Much more than the money is the incubation that happens after those hackathons. And you can be a part of the whole bouquet of services that Eco Innovation Center offers startups and the ecosystem as a whole. And we do look forward to you being part of our community and joining our community. So again, I remain your host of TechBiz. Come to you every last Thursday of the month. My name is Victor Gbenga Afolabi. I'm the founder of Eco Innovation Center, and it's been a pleasure having my friend and colleague of many, many years. We've known each other for several years. I mean, he reminded me today, I was like, wow, that comes way back. I think in the early 2000s, I think was our first chance meeting. And again, 2 decades down the line, we're still in this business of building brands and helping people win. And so thank you very much, Seye, for your time today. Thank you for everybody who has taken the time to be a part of this. We appreciate the sacrifice of your time, and we do look forward to hosting you again sometime next week, next month, as we have another exciting session of TechBiz where we provide handholding and support. So feel free to look at our websites, look at the Institute, learn anything you want to, join on our core or our sessions, join our hackathon sessions, and just generally see what you can learn from our community as we offer the handholding for startups to be able to scale. Thank you very much. And I do wish every one of you a lovely weekend starting for tomorrow. Do have a great evening. Thank you.